Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, it was announced on Sunday that Dubai's non-oil foreign trade exceeded 1.32 trillion dirhams during 2013, a rise of 94 billion dirhams on the previous year. His Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, the Dubai Crown Prince and Chairman of the Dubai Executive Council, praised the performance, which he said echoes at the ongoing growth of all sectors in Dubai and the UAE as a whole. During 2013, India topped Dubai's major trade partners with a total trade volume of 137 billion dirhams, with China second at 135 billion dirhams and the US with 86 billion dirhams. For imports, China topped the list of trading partners, followed by the US and India, while for re-exports, Saudi Arabia was ranked first, followed by India and Iraq. The Emirates' imports saw an increase of 74 billion dirhams to reach 811 billion dirhams in 2013, while exports and re-exports increased by 20 billion dirhams to 518 billion dirhams. Dubai saw a 10% increase in tourist numbers to 11 million, with the number of passengers travelling through Dubai International Airport rising by 15.2% to 66.4 million passengers. New trade licenses also recorded an increase of 12% last year, equal to 18,700 licenses, while the total value of real estate transactions in Dubai grew by 53% to more than 236 billion dirhams. Dubai Exports is looking to issue an online Halal Index to list all UAE-based firms that are halal, according to local reports quoting Saeed Al-Awadi, the CEO of Dubai Exports. The index will be set up by Dubai Exports, an agency of the Department of Economic Development, DED, and will include relevant information about all the halal companies, banks, financial institutions, Islamic products and Islamic services in Dubai. Halal companies are firms engaged in the business of production, marketing and distribution of products that are Sharia compliant. Al-Awadi said that this comes in line with the government's initiative to position Dubai as the world capital for Islamic economy in 2 years. He added that this index will facilitate the growth of Dubai's halal exports. According to the report, Dubai could emerge as the leader in the next phase of the evolution of Sharia-compliant sectors, including finance and insurance, halal food, lifestyle and travel. While Muslim consumer expenditure globally on food and lifestyle sectors reaching around $1.62 trillion in 2012 and expected to reach $2.47 trillion by 2018, with Al-Awadi pointing out the need to boost this business sector by providing the right infrastructure and services. The US dollar rallied in trading last week on a better-than-expected US non-farm payroll report, which trumped expectations. The monthly jobs report showed that 179,000 new jobs were added during February, well above the expected 149,000, and January's upward revision to 129,000 new jobs further stoked expectations that the US Federal Reserve will continue their program of scaling back monetary stimulus that's been debasing their currency. With a host of growth-related data from the UK and the US expected in the week ahead, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to get his views to find out more about what to expect.
Well, markets have opened the week on the back foot following a slew of weaker than expected Chinese growth-related data. Now, on Sunday, we did see that inflationary pressures in China have continued to wane. And this morning, we saw export data from China falling 18.1%, which has generally spooked investors and has thrown the global growth recovery and the Chinese growth recovery in a bit of a doubt. Now, we've seen the Australian dollar weaken on the news. Of course, Australia has the largest trading partner of China is Australia. We've seen the Australian dollar weaken about 100 pips against the US dollar, and we've seen the Chinese 300 CSI index also drop to a 5-year low. Overall, Asian equity markets have also opened the week lower following a 6-week high, And overall, the US dollar has continued to benefit following last week's US non-farm payroll report, which was much better than expected. Overall, looking at the week ahead, we expect growth-related data to continue to drive risk sentiments. Tomorrow we have a host of industrial production, manufacturing production from the UK expected to be either in line or slightly better. They should improve the prospects for the GBP against the US dollar. But overall, the Ukrainian story will also remain in the backdrop. Remember, we have the Crimean referendum due out on March 16th. So generally, following the fallout from last week, the impact has been rather mute for markets, and we expect that to continue to be the trend. But overall, if we see any types of escalations, this will see risk appetite decrease. It will see a larger flow into the US dollar, with equity markets remaining on the back foot. But assuming that that remains in the positive and we don't see any types of further escalations, we can expect to see markets moving slightly higher. Overall, gold will remain to consolidate in this range between 1330 and 1380, and we expect the euro to make a test of 1.4 against the US dollar in the week ahead.